Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 6th, 2025, and we're taking a deep dive into the NZDUSD, also known as the Kiwi. This pair has shown some interesting life recently, but it's happening within the shadow of a much larger, more dramatic move. We'll start by breaking down the current news and macroeconomic landscape before we jump into the charts to see how it all connects. The dominant theme right now is broad-based US dollar weakness. Markets are on edge with persistent fears of a US government shutdown, which is weighing heavily on the greenback. This sentiment was amplified by recent US private sector jobs data from ADP, which came in weaker than expected. This has traders increasing their bets that the Federal Reserve might be forced to cut interest rates sooner rather than later, which is bearish for the dollar. This has provided a significant tailwind for the NZDUSD pair, allowing it to strengthen and push above the key 0.5800 level. However, it's not a one-sided story. The Reserve Bank of New Zealand, or RBNZ, has its own dovish stance, with many analysts forecasting future rate reductions for the Kiwi. This brings us to the most critical event on the horizon, the RBNZ official cash rate announcement scheduled for this Wednesday, October 8th. That decision will be a massive catalyst and could easily dictate the pair's direction for the rest of the week. Now, let's look at how this narrative is reflected on the daily chart. If we zoom in on the price action from September, you can see the story unfold. The pair reached a significant peak around the 0.6350 level on September 24th before a catastrophic drop. We saw incredibly strong bearish momentum that completely wiped out the previous uptrend. The price found a bottom and began to consolidate in a range, establishing a critical support zone between 0.5750 and 0.5770. This area has held firm against selling pressure and represents the key line in the sand for bears. The recent pop higher, which we discussed in the news section, is this bounce off the support level. You can see the price climbing from the end of September through the first few days of October. From a technical perspective, the long-term trend is undeniably bearish after that massive sell-off. This recent rally is, for now, just a counter-trend bounce within a dominant downtrend. The first major hurdle for bulls to clear is the recent high around 0.5840. Above that, the psychological 0.5900 level will likely act as significant resistance. On the downside, that 0.5750 to 0.5770 area is the most important support to watch. A break and close below that zone would signal a continuation of the powerful downtrend. Let's switch to the 15-minute chart to get a granular view of this recent recovery. Here we can see the short-term uptrend that started around October 1st. The price moved constructively from below 0.5790, forming a series of higher highs and higher lows. This push took the pair to its recent peak, just above 0.5830 on October 3rd. However, looking at the most recent candles from October 3rd through to today, you can see that the upward momentum has stalled. The price action has become choppy and is moving sideways, consolidating its recent gains. This aligns perfectly with market reports suggesting consolidation as traders await the next major catalyst. On this short-term time frame, we can define a tight range. Intraday resistance is sitting at those recent highs around 0.5835 to 0.5840. Meanwhile, immediate support can be found near the 0.5810 level. A break of this short-term range will give us the first clue about the market's next immediate move. Returning to our daily chart, let's outline the potential scenarios moving forward. First, the bullish case. For the price to move significantly higher, we would need to see continued US dollar weakness, perhaps from an escalating government shutdown crisis. This would need to be coupled with a less dovish than expected statement from the RBNZ on Wednesday. The key technical signal for bulls would be a decisive daily close above the 0.5840 resistance level. A break above this level could give the pair enough momentum to target the 0.5900 handle, but expect significant selling pressure there. The probability of this feels moderate in the short term as it fights the major downtrend. Now, for the bearish case, which aligns with the longer-term trend. This scenario would be triggered by a resolution to the U.S. shutdown, causing a relief rally in the U.S. dollar. Alternatively, a very dovish RBNZ that strongly signals more rate cuts could also send the Kiwi tumbling. The price action to watch for here is a break below immediate support at 0.5800. A daily close below the critical 0.5750 support zone would be a high probability signal that the downtrend is resuming, with new lows being the likely target. Finally, there's the neutral scenario. It's highly likely that the market will remain in this consolidation phase between roughly 0.5770 and 0.5840 ahead of the RBNZ meeting. Traders will likely be hesitant to place large directional bets before such a key risk event. So, to recap the key takeaways from NZDUSD. The market is being pulled in two directions. A weak US dollar is providing support, while a dovish RBNZ and a bearish technical trend are providing pressure. The key resistance levels to watch are 0.5840 and then the major psychological level at 0.5900. The key support levels are the 0.5800 handle and, most importantly, the zone between 0.5750 and 0.5770. Our primary prediction is for choppy, range-bound trading in the immediate short term as we lead up to the RBNZ decision on October 8th. A surprisingly hawkish RBNZ or worsening U.S. news could see a break above 0.5840, making a test of 0.5900 more likely. Conversely, a dovish RBNZ or positive U.S. developments would likely see a break of the 0.5750 support, reinforcing the bearish trend with high probability. Keep a very close eye on the news flow out of both the U.S. and New Zealand this week. That's our analysis for today. Thank you for watching Explain the Charts. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell so you don't miss our future updates. Please remember, this content is for informational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and analysis before making any investment decisions. Stay safe and happy trading.